We're joined by Don Suter, Managing Principal of M3 Capital Partners. Don, thank you for joining us.
Nice to be here. Thank you.
What do you think are some of the big trends in real estate investment in 2010 to be on the lookout for?
Well, I think we can start with kind of the first one that everyone's talking about right now, which are the blind pool REITs. I think that's topical. I think what we're seeing now is sort of a pushback from the institutional community and the retail investment community on those vehicles, and I would expect in the future here, in the near future, in 2010, and probably for the remainder of the year, those deals being very difficult to get done. I think primarily the reason being that investors are worried that there really isn't deal flow, that those vehicles can raise capital, but can they actually deploy it?
You know, when do you think that the transaction boom that a lot of people have been talking about will come, if at all?
Yeah, well, you know, conventional wisdom right now is everyone's saying second half of 2010 we're going to see transaction volumes pick back up. I am probably in the minority, and I don't really believe that's going to happen. And the reason for that is I don't see the catalyst for transaction flow coming back in 2010. The banks have been put in a position where they don't really have to mark the assets to market. They don't really have to foreclose on the loans. So there are a lot of different expressions being used for this phenomena across our marketplace, as well as some of the developed economies in Europe, which is kicking the can down the road, pretend and extend, and really until there's some type of catalyst that causes essentially the banks, the lenders today, to really mark those assets to market and really cause them to come into the market. I really just don't see transaction volume picking up.
And do you foresee much joint venture activity between REITs and other institutional investors?
The issue really is more around what are those investors looking for, and when are they going to be able to deploy that capital into the space. So I think the JV model is a good one for many large institutional investors, but the really key component right now is they want seeded. They can be an acquisition venture or a development venture, but they want them seeded with assets. So again, we're back to there's a lot of capital. The JV model is a good one for many institutions, but they're not going to go into a purely unseeded JV or acquisition JV type structure. They want assets and they want cash flow.
Okay. Well, thank you very much for joining us, Don.
You're welcome. Thank you.
All right. For more information on this and other REIT news and analysis, check out REIT.com.